Hello, everyone. Don Garman here from Mirador Capital Partners. Here we are, another Tuesday, and another investment committee has just released. And so I thought I would share our current thoughts on what I want to start out by saying has been an absolutely horrendous period. And I think we all understand at this point, far and away the worst stock market environment that we've had in 15 years since really the depths of the global financial crisis in 2008. You can imagine that was a long time ago, nearly 15 years ago. And uh, at that time, we had large, well-known, um, household name companies going bankrupt and being saved by the Fed and systemic risk and, sort of in our face every day why these sort of massive losses were being sustained. And this period has been similar in a lot of ways in terms of the swiftness and the severeness or severity of the declines. And, you know, as I've been saying in these videos for a little while now, we haven't even really gotten to earnings markdowns yet in the second half of the year. And so I just want to recognize and say, I get it. It's as brutal, and there is no place to hide. Bonds are down, stocks are down. You can come in on a particular day when oil's down 6%, and so it's sort of just been this massive rolling tidal wave that just pounds every single sector in succession, it seems. And I realize it's frustrating, and in some sense, it's terrifying. And the idea that this is all, going to be okay seems far fetched. And I just want to say, in some ways, this is little bit of the mirror image of where we were a year ago. And so you've probably heard, there's just a huge number of NASDAQ stocks that are down 60, 70, 80, now some 90% from where they were at their peak. Fortunately, we don't traffic in a lot of those, so we've missed the worst part of that terrible bar fight. But we have certainly, it's moved all the way up into the ranks of, I think, maybe the higher quality companies, some of the ones we do own, which is there's no solace in the fact that even those can go down 25%. And many of them, great companies are down 30, 35, some 40. It's brutal. So why do we not just throw it all out and sit in cash and wait? So fair question, but the answer to that is when we look through these periods, this moment in time, and it's a moment when you don't have to look far to find bad news: inflation, war, supply chain. All of these things are, I would say, the aftermath of the extraordinary action that was taken during the pandemic to prevent a more serious and sustained economic crisis then on top of the pandemic. And, we've talked about it as medicine to the vein and the patient lurching on the table and all of that stuff that probably still applies to this, to this time. But I want to remember that in 6 months or a year looking back, I want to think now to what will we wish we had done then. And so obviously, if things look worse then that would create a condition. And if things look better then, looking back to now, that will create a different condition. Without perfect foresight into how that will look, what I know is we will have to continue to own assets through the next 3 to 5 to 10 and longer year periods. And then I can only take comfort in what we own. If I look into the portfolios themselves and start to look at the holdings, then I get a lot more comfortable that, even though the prices of these are down in that, the last 6 month period, and now some down over the last 15 to 20 month period, if I didn't own those things, I would want to buy them now. And so it doesn't make me feel like I should be selling it all now, when I really like the things we own even more at the current prices than I did at the higher prices. So, um, that is the answer. And it's always been the answer, even when we knew, I think things were sort of, speculative and high a year ago, is the holdings themselves are companies that we are comfortable holding for a long time. And, now we're in a position where the prices are lower than they were, which brings me to my second, editorial comment. Um, what I always feel obliged to share is what I'm doing for my own family, and also what I think you should be doing in your situation, which can be somewhat different than mine and across, a lot of nuanced ways. So, as I think I mentioned in the last video, we're actually taking some steps to adjust our plans to put more money to work, and we're doing that in two ways. We're adding some cash to our long view strategy, which of course holds today as its largest single position, a position that's a hedge against stocks going down. And the second thing that we're starting to do and plan for is lowering the size of that hedge and continuing to add things that we think will be the beneficiaries as we do come out of this, because we will. And over the last however many years, I always get people that say, hey, if you ever think there's a great opportunity, let me know. I've got this little stash over here. But this is, if you remember the old bromide, buy low, sell high. And we only know looking back how low was low and how high was high. What we know now is things are a lot lower than they were even a short time ago. And my dad used to say, you know, quality, diversification, and patience is sort of the best path forward always. And it would be hard to argue or dispute with the fact that that long view strategy is comprised of quality, diversification, and the patience part is somewhat individual. But I think that we are now in the zone where you need to start to look at maybe what could go right. We have absorbed massive amounts of negative sentiment and news, and nobody wants to buy anything. And I think yesterday was an interesting point. And then I'm going to end with a hopeful finish, which is yesterday was interesting in that the volume of selling was high, but not extraordinary. But it was the lack of buying that was notable. So I look at my own situation, right? We didn't buy anything yesterday. And like I said, we like what we own, which is different than saying we're going to start buying aggressively. And everyone is sort of sitting around with that same vibe. It's not quite time yet. And so if you don't have any buyers, then prices just keep going down in integers. And those are painful days. However, today might end up looking back as having been a turning point. And here's what I mean. We have had a historic rise in interest rates along the curve, 2-year all the way out to 30 this year. The 10-year yield on the 10-year treasury is up more than 100% this year. I think you have to go back to the 1700s, somewhere in the 1700s, when 1700 and something, when the last time that happened. And so that speaks to the violence of the interest rate moves, which busted a lot of people's models, which makes a lot of these long duration tech assets really hard to value and know what to pay for them. And then they're running up against hard comps and they just get obliterated, blown to smithereens. Today, the yield on the 10-year went back under 3%. You'll notice if you pull up your screen, and I don't want to jinx us because there is an hour and a half left to go in today, but when rates are stabilized, markets are much more stable, and there's something to grab onto. And I think all we can hope for is a little bit of stability in interest rates for the time being. That would go a long way to sort of helping the market get over this fever that it's had since the beginning of the year. So I'm going to leave it there for now and say I recognize it's extreme, it's terrifying, it's uncomfortable, but it will end. And, like I said, up until 6 months ago, the market had been an all-time high throughout all of the stock market crashes and crises and all that stuff. And I'm in the camp that this has been a crash. And I'm not afraid to say that because it's true. If you look at the speed and the magnitude of how far things are down. However, there's a lot of good companies out there with really good valuations, and we're starting to figure out which ones we want to lean more into and ride out of this thing as we get through this. So anyway, that's it for now. And as always, reach out if you have questions. And thank you once again for everything. Okay, bye.